Good Sunday evening, option traders. This is Sam the Trader Geek with your Sunday night option review video for May 18th, 2025. Hope you're having a great weekend, had a great weekend. And we're looking at major markets for Friday. And everything was up except for the VIX, of course, and gold giving up a little bit of ground. But the smallest of the small, the micro caps are up 1.21%. Mid caps up 1.09%, Bitcoin up 0.92%, and the small caps up 83 basis points. So pretty good day on Friday, capping 5 for 5 up day for the week. Speaking of which, Magnificent Seven, we're magnificent again, coming up 9.5% on the week, and the Q's up almost 7%, and the micro caps, as we saw earlier, doing well, up 5.63%. SPY up 5.29%. VIX losing about 20% of its value, as did gold, lost 4%, a little weak, and the bonds lost almost 1%. Aggregate bonds were just about flat, so dollar gaining a little bit of ground with high yield bonds up 1%. On a quarterly basis, so far we could see quarter to date, which is basically halfway through the quarter as of the 16th or 15th, if you want to get technical. Bitcoin up 26%, Mag 7 up 14%, the Q's up 11%, gaining back a lot of the ground it gave up, with the VIX down about 22, TLT losing 5% on the quarter, and the dollar losing 2.31%. And then if we look at things on a year-to-date basis, gold is still the scoreboard leader, up 21.6. Bitcoin up 11%. Q's up 2% on the year. So big comeback on the technology sectors, and a vote for innovation and continued outperformance in the tech sector. Micro caps, despite the last week or so, are still lagging, down 7.5%, with the dollar losing 5%. Small caps down 5%. Magnificent Seven still have not, on an aggregate basis, turned positive on the year. So we've got the Dow flat on the year, the SPY up about 1.4%, even high yield bonds up 1%. So quite an improvement after that week. Not accounting for what happened after hours on Friday, unless you've been living under a rock. You know that Moody's downgraded the U.S. Treasury debt. And as of, call it 7:35 Eastern time on Sunday night, after being down as many as 55 points, the S&P futures are down about 35 at the moment, with the NASDAQ futures down about 125 points. So it would seem that Honey Badger don't care, because there's no follow through on what mostly transpired after hours on Friday. And so it looks like they're buying the dip so far, but we'll see here how that pans out for Monday morning when that comes. So switching over here, and let me make sure I'm sharing this chart. Because it doesn't look like you're seeing it. Oddly enough, I lost my sharing. So give me a second here. Bear with me. Must have forgot to hit the control key when I switched things. So let's see if you can see this now. And we'll go to the SPX chart. Sorry about that. There we go. All right, so we're looking at my typical tri-pane that I show on Sunday nights, and you can see on the daily, very nice 5-day uptrend, and MACD solidly positive, nothing bearish about this. And then what a beautiful candle last week, right into the ATR trailing stop up here on Friday. So we had a 300-point move from 4,800, almost, well, not 4,800, sorry about that, 5,800 to 59.58. There's a 150-point move on the SPX last week. So, yeah, yeah. So pretty big move overall. Last week we were expecting 130 points, and I think our range was more like 300 points last week. MACD flipping positive on the weekly, and you can see here on the monthly that big long tail hammer turning into a big beautiful candle for May so far. You got a parabolic stop and reverse there about 60.50. So that would effectively negate any downtrend on the monthly. And we could get there. I believe we're going to all-time highs and then some, but not without some backing and filling. But they seem anxious to buy them tonight, but it's still very early. So let's take a look at the NDX. Probably looks a lot the same. Yeah, you see five green candles last week, way outside the expected move, right up here. Um, yep, and you can also see it here, 21,427. Beautiful gap up on Monday and never looked back at all. So the shorts were left in the dust. You can see on a monthly basis, another nice candle, although it was looking more positive here. And MACD wants to flip back up again. So you can see that there's no hesitation about buying last week with 5 out of 5 up days, MACD turning positive here. And then the last but not least, take a look at the small caps. And you can see, starting to see some improvement here. We're at the 100-day moving average, also above the options implied expected move for the week right here. And on a weekly basis, you can see here that we are starting to turn the corner on the MACD. Nice candle there. Monthly also looking similar to the SPY and the NDX or SPX and the NDX. So we have bearish PSAR, bullish chandelier stop. So got a long ways to get that PSAR positive, but small cap starting to look much improved here. We've gone from pretty oversold to now neutral on the RSI here on a weekly basis. Still middling here on the monthly, and then we're not quite fully overbought, but close to the 70 mark of overbought level on the RSI. Taking a look at the VIX, as we saw in the statistics, I mean, look at this weekly, down to 17.24 from about a 60 level, and solidly negative MACD, turned negative on the weekly, and nothing really to look at on the monthly. But VIX is at 17.24. We're below the long-term average of 1950. There's nothing bearish for the market here. The only thing bearish here is bearish for the VIX. And one of the things, I like to share over the weekend and in my videos is the relative pricing of VIX options, the puts versus the calls. And we'll go out 30 days. So we ended the week at 17.24%, 7.24. Let's call it 17 and look at the 18 calls. If you were bearish on the market, you look at the 18 calls, you'll probably spend about $2.60 for them. And then going $1 out of the money, we would go to the 16 puts. So right away, what you see here is the price of the calls relative to the equidistant puts. It's about 10 times. So this is a meaningful data point saying that there is some hedging going on here, and they are expecting a pullback. And maybe that was the expected downgrade or somebody knew something, but definitely calls on the VIX are a lot more expensive than the put. So that would augur for some type of pullback, although looking at the futures tonight, It would appear like they might even get this back to even by the open tomorrow. We'll see. SPX, like I said, had a 130-point expected move last week, implied by the options. This week, we're down to 96 points. Now, there's not a lot of economic news coming out this week, but $96 seems wholly inadequate for this week. But typically, the week before the holiday tends to turn bullish, especially in the latter part of the week as traders filter out for a longer than a 3-day weekend. So Thursday and Friday should be thinning out. And we'll see. I think 96 is not enough. And we could easily have a day where we're up or down, move 96 points in a day. But there you have it. That's the move. And let's take a look at our trades that we have and call it a night. And let me see if I can reduce that, get you the right chart. Come on. All right. Get everything in place. There you go. Okay. So we'll start out with an alphabetical order. Closed a lot of nice trades last week, mostly put sales, but they were profitable nonetheless, and it's nice to put those in the win column. AXP, we sold a short put, which expires on the 30th of May. We're already up 37.42%. AXP going sideways after Monday's gap up and looks to continue to trend. So this is pretty much out of the money to a 285 call. So we're $14 out of the money unless they have a really, really bad couple of days. This should be a good one to keep most of the premium that we sold here. And if you have a lot of these or multiple units, when you get to about half of your profit or 75 cents, close about half, a third to a half of them. Don't give it all back in case the market flips out about something in the news or what have you. BJ's, they have earnings coming up, I think, on the 22nd. So that's going to be on Thursday. But a really nice day on Friday. We harvested our first profit target at 545. And this call spread that expires in June, looking real good, the 110, 120. It's about halfway there at 116. So we should get to that $7 mark if it's going to rally more into the earnings date. I'll decide on Wednesday or Thursday what we're going to do with this one, since we may or may not want to risk this into earnings depending on where we are, because we are on pure premium, a bit of intrinsic value. But look up here, we have a parabolic stop and reverse at 117.53. It takes that out. Then we could get fully in the money on our spread. MACD trying to turn back up, and the RSI is supportive. It's in the neutral zone. BLDR, we need this to kind of bust a move a little bit. It's been kind of lethargic. Tuesday, kind of backing off the 50-day and coming back here for a landing on the 21 EMA. So stuck under the 50-day, but we have a lot of time in this. It's a January 130, 160 call. We're down 15% on it, but this was not meant as a 1 day or 1 week or 2 week call. This is a longer term call on BLDR for a recovery, assuming that we see recovery in the housing market and interest rates continue to come down. So one step at a time. BLDR, I still like it. Costco, we still have that vertical put spread, 925, 900 and 20 June. This one should have earnings coming up soon. And yeah, that's on the 29th. So that's after the holiday. So we're up 45% on this already rolled twice option. So nothing to do here, but watch this one. And will continue to like Costco as long as it's behaving as it is. Now, CrowdStrike, I think, has earnings coming up this week. No, it's not to the third, so that's why. That's right. So I should have known. On CrowdStrike, we have the May 30th, 385, 360 put spread. We're up 80% on this. Had a nice couple of days last week, and we will be out of this before earnings since it does expire ahead of earnings. We're up 80%, so it's kind of nice. And if we get some downside, and I see an opportunity to roll this and still get this off of our books by before earnings, I'll do that. So I'll have an eye on this one. FTAI, another lethargic one that's not doing much in light of the positive action last week, but it didn't do anything wrong. We're down 3% on this one. It's a nice breakout here, but it's holding steady. It's not going anywhere. Like I said, hasn't done anything wrong. MACD solidly positive. We're not yet overbought on the stock. Let's just give it time to work. It's a June call spread that we have on. GIS, a new play on Friday, one of three that I put on. I usually don't put on that many plays on Friday, but this one kind of an oversold counter trend bounce, and we're already kind of up on this one, 29 points, 29% on it. So we paid $1.20 for this. We're looking for about a double on the first layer. Excuse me. And I might just switch that to 50% profit and get some off the board if this thing pops up for a couple of days. And I think if we see some weakness in the market, we'll see some support in the consumer staples. But this has gotten to a bit cheap, if you will, and it was time to do something with this. We sold a put to finance a call, and we're up 29% on GIS. McDonald's, you should have taken some off, but two beautiful days on this one. So we sold the 300 put for $1.10. We probably should start taking this one off since we're getting down to about 35 cents. So if you haven't taken any off, you should. And we'll be looking to close this one. It expires at the end of this week. So a nice play on McDonald's, quick short-term put sale. NVIDIA, we closed a bunch of short puts that we had on this one, showing a lot of strength. It was outside of the Bollinger Band, but came right back in. MACD is solid positive, and we're definitely getting a little overheated on the RSI here. But we have a long-term play in this name, NVIDIA, and we took some profits last week at the 12.25 level. And I'm intentionally being aggressive on our next profit target at 18.25. I suppose that where it is, or where it closed on Friday, $15.21 might be another one to pick on. But we have so much time in this, and we are in the money. So I might have to reposition if the strength continues to persist. But I wouldn't blame you if you took some more profits at the $15 level, because we're not going to get to the full expansion of value given how much time is left in here. And honestly, it's quite surprised me how far we've come from 86 to 135. So I would expect some backing and filling in NVIDIA. OSCR, Oscar Health, doing well. Had a nice day on Friday. Finally moving up a bit. We're only up 5% on this. And after pulling back from the highs here on the 8th of May, we had earnings right here on the 7th, and it gapped up, followed through the next day, but has come in for landing. But now it's time to turn around and keep going. So we are pretty overbought here. It's kind of in the red zone, and the MACD is positive. PLTR, only regret here is that we have a put sale, but we're making money. and we didn't buy a call, but a new all-time high. How about how fast that happened? 133, pulling back a little bit on Thursday and Friday. Our puts are up 81%. Hopefully, you've taken some of these off and claimed your profits on it, since having multiple units, you want to take some of them off when you're at 50%. So QQQ, we had a put spread and a put inflection spread that expired last week, the 440, 420 put spreads, after we harvested a couple of profits on here. The last bit of the 440, 420s expired worthless. We were far out of the money, of course, but we still have on the 420 put in July, and that right now is worth about 80 or 90 cents. And so we'll keep that on to kind of let that whittle away a bit, and then ultimately close it to make this a really nicely profitable play. And that cost was 45 cents. So we've already harvested a couple profit targets on there. And then we have another short put, the 420 in June, which is also, it's about 50 cents now. So we could close this out, but it's so far out of the money that let's just let it decay. And once it gets down to about a quarter or less, then I'll probably close these to free up the margin. And you may choose to do so. You may not. You may choose not to keep a 50-cent option for such a big index, but it is pretty safe and kind of helps us recoup some of our costs. SDGR, you can see here, we're just kind of, it looks like we're coming in for a landing to the 50-day, which we bounced off of on Friday, up a whopping 22 cents. But this has been kind of a disappointment, but it hasn't really done anything wrong. Quite a distance from our stop, and it is a January play, so I'd like to see this start going. But slow, boring, hasn't done anything wrong. We are down 25% on our call spread, but in the whole scheme of things, let's give this thing a chance. It hasn't done anything wrong, but the MACD is not in our favor. SPY, what we have is, again, just like the QQQs, we have a couple of short puts, long dated, that are still on the books. And so we have the 490s in June, which are $100 out of the money. So let's see if I can get this and see. So the puts, actually, no, these are the 575.80 put spread is still good. And the 490, I'm confusing the two plays. So we do have an active put spread. I'll have to keep an eye and see where we land tomorrow, if there's anything to potentially harvest on this. I kind of doubt it, but this is our active hedge in the portfolio. And we paid 19 cents for it. We're down about 69 cents on it. Big whoop. But the one we do have here from an old inflection point spread is the one with the short 505 put expiring on June 30th. And we're waiting for that one to kind of decay a little further in our favor. But nothing wrong with this chart, from a low of 481 to 594. That's over $100 on the SPY. And you have to agree, that's pretty incredible in such a short amount of time. Tempest, a new play we put on last week, a combo play, coming in for a landing here and then having a nice day on Friday, staying inside. This red line is kind of a demarcation for the options implied expected move for the week. MACD's positive, still have room to the upside and getting overbought. We're up 27% on this already, and our first profit target is 4.25, which is about a 50% profit on our first tranche. But looking good. Tempest, brand new play. TLT, not so hot. So we did come down to a low of 85.20. Didn't violate our short strike, which is the 80, 85 put in August. We're down about 33%, but we've done several rolls on this, and we've done well with TLT. So I'm not worried about this, but we do need to see some form of strength on TLT. But the debt downgrade is not going to help TLT, at least not on Monday. UNG, we've closed off that play. Walmart is our next one, and we have a vertical put spread, the 90/80 put spread, and nicely profitable on that. We took half of them off, and Walmart kind of doing a little fake out to the downside on earnings and coming back strong on Thursday and Friday. So nice timing to take advantage of this one. And we're up overall 65% here. And we're looking to just keep this one for a little bit to see it decay down to about a nickel. Now, here's another one of our problem children, but still lots of time on this. It's out to June. We sold a put and we bought a call. And so far, we're down 234%. This is kind of meaningless when you do it this way. But in any case, got to be intellectually honest on this. If we're going to call out the percentages up, we have to call the percentages down. In any case, 2 nice days. Hopefully this means we're going to get a little turnaround. MACD looks like it wants to cross back up again. Maybe if there's weakness in the market, the biotechs will catch a bid. Who knows? But there's our 50-day right there, that blue line, and the PSAR over 81. And then we could get going with some upside. So plenty of time on this. It's an ETF, no single stock risk. Let's see if we can't get some strength on the XBI. So as I mentioned, this is a holiday week, and I would expect some backing and filling this week and a bullish close out to the week. But we are going to start with some downside tomorrow, given the debt downgrade. We'll see if they can close the gap at some point, and then things will thin out towards the latter part of the week. Nothing bearish about the charts other than the fact that we're extremely overbought, and we do need some type of consolidation or rest. Again, be careful out there. Be a buyer of short-term options, not a seller. I will see you in the room, and I appreciate you watching. If you have any questions, at Trader Geek on Twitter, Trader Geek Sam in the room. And Dan and I will see you again on Thursday morning for another weekly webinar. That means that there won't be a Wednesday night video when we do the webinars. And I hope you like what we're doing there, and let us know, give us your feedback on what you'd like to see in those webinars and what you want us to talk about after all this is for you. So take care, enjoy your evening, and I'll see you tomorrow. Bye-bye.